Learning is the key to successful investing, and who doesn't want to invest in some way?
Here at L.E.A.R.N Grow Invest, we focus on financial education, all with the aim of sharing our knowledge on personal finance, investing, and building wealth. We do this on the foundation of our faith in God.
If a more holistic approach is what you need, check out our Grow Faith-based financial coaching program.
Find out more about us at learngrowinvestclub.com
and follow us on all social media platforms at Learn, Grow, Invest.
Welcome to another episode in our CEO series here on Learn, Grow, Invest. Today I meet with Harvey Levers, CEO of Elite Diagnostic. We'll talk about the company, how they've been adjusting to this climate where we've seen new entrants into the market. We'll talk about the fact that the government has started to put measures in place to maybe provide its own healthcare services, more scans, etc., and what that means for Elite. And of course, we'll talk about the future of the company. It's going to be a great episode. Thank you so much for joining. I look forward to your questions and comments below. And let's get started. So, Mr. Levers, Harvey, welcome to the show. It's a pleasure having you. Thank you for being here.
Thank you. Very happy to be here. Thanks for the invitation.
Awesome. All right, so we're just going to get right into it. We're going to try to get a bit of an understanding as to what's been happening with Elite. We also ask our CEOs to share a little bit about themselves as well. So we'll start there. Tell us who is Harvey?
Well, Harvey is what you see. I am a professional at heart, perfectionist at heart also. I've been in the medical healthcare industry for the last 11 years. 1 year here at Elite. I joined Elite in July 2022. I was previously at Nuttall Memorial Hospital for the previous decade as CEO. Prior to that, I was in the financial services sector for the previous 20 years, I would say.
Interesting.
I'm a people person.
So you understand the financial space as well. Mm-hmm.
Yeah, I'm a people person. I also believe in teamwork and customer service.
Good stuff. So that means you understand a bit of the financial industry as well as the healthcare industry. That actually works well for you, right?
Yes. I understand enough that I need to ensure that my company gets the proper treatment from our bankers.
Which is, I'm sure, important in how
very important. Very important.
All right. So what has the first year been like for you at Elite?
It has been a very rough year. Last year, our financial year commenced on the day I joined, July 1st. And it was a year filled with a record level of machine downtime in Elite's short 10-year history. We approximated about 40% of our productive hours was lost due to machine downtime. So it really hit our revenue earning projections, but we managed to exceed last year's overall gross revenues due to extra shifts being input and cooperation by the staff. But it was not where we wanted to end up, but at least we did end up doing better overall. Cost containment, though, was an issue because we had certain fixed costs that, despite our downtime, certain fixed costs had to be incurred. So our net profit at the end of the day was below the prior year due to that factor mainly.
Okay, and I definitely see that's something that you addressed in your most recent report. And we'll talk a little bit about the machines a bit later. But there's a quote that stood out to me that I thought I'd mention here because I think it's just a very interesting way to look at things. So the quote said, "Many companies get trapped by the paradox of hitting numbers now versus improving sales for future quarters or years ahead." So that stood out to me. What does that quote mean for you?
Well, it symbolizes exactly where Elite finds itself today. We have demands by our shareholders for increased dividend payments. Most companies, all listed companies, have those demands from their shareholders. More frequent dividend payments and also an increase in the amount that is paid out. But we have to balance it internally here. We have to look at the long-term stability and growth of the company. Yes, we earn 13 million the prior just concluded financial year. How much of that do we pay out in dividends? Can we afford to pay out any in dividends, and at the risk of deferring the expansion and the growth of the company over the coming year? And these are the balances that we have to calculate and propose to the board and the shareholders. How much of our earnings do we keep? How much do we reinvest into the growth of the business? How far down the road do we look? And it is my belief that the long-term sustenance and growth of the business is more important than getting rich tomorrow by a huge dividend payout. So we have to calculate and find a balance in between. How much do we reinvest to grow, so that down the road there will come a time when this question is not as to what proportion to pay out is not that difficult, because we can grow so much, and we might reach a level of growth within the industry that everything thereafter can be paid out as dividends. But initially in this growth stage, after just 10 years in the industry and still growing, we have to be careful and cautious as to meeting that balance.
I completely understand that it's trying to balance both objectives, right? Company, shareholders, growth. So that's interesting. I mean, I think based on the picture being painted for the outlook for the company, it definitely sounds as if, you know, you're optimistic on the way forward, which we'll talk a little bit more about later. But you mentioned something earlier, which we said we would get back to, which is the downtime for the machinery. How have you been managing that? What steps have you taken to improve that? And what I guess controls can be in place to manage
it's a difficult feature that every provider within the industry faces. We all face it, and when we're down, our competitors benefit. When they're down, we benefit. These machines are very, very large, very technical, with thousands of parts. At any one time, one or two can go down that preventative maintenance would not have necessarily picked up, because we do provide preventative maintenance in accordance with the manufacturer's recommended schedule. We go over and above that recommended schedule, because it is very costly. Every day that we have an MRI machine down, for example, is quite a sizable chunk of revenue. And sometimes the fix might be a $10,000 fix, or it might be an $8 million part that it requires. So it is a hit and miss as to how costly a downtime will be. There is a shortage of qualified local technical service people to fix. There's a shortage, and there is need for improved abilities in that area. So what we find, us and other companies within the industry have had to rely on overseas personnel who are former employees of the manufacturers, and we have to bring them in to assist us in getting some of our technical issues overcome in the shortest possible time space. Now we have a decision. When a machine goes down today, for example, do we decide? We don't know what the problem is initially, so we initially tend to rely on the local personnel available to us, so when they can come to us, because there's a shortage. Everybody's machine is going on at the same time, so they can't be everywhere at the same time. How long do we wait for them to come and analyze and see if they can fix it, or do we immediately get someone from overseas to come and fix the problem? We might fly in somebody at great cost, and it was a simple problem, so we would have lost out then. But also we have to balance it with how many days or weeks that particular machine is down before we are able to get it back up and running and earning. So these are some of the difficult decisions that we are faced with each day.
That sounds like quite a bit of a challenge, right? Because
very serious.
Is it, and I'm sure the cost to replace the machine is also quite high. Yes. It's not like you can just pick up a new one tomorrow, right? So, you know, procurement would take months, I imagine. So
yes, they're built on a new, for example, a new MRI machine easily cost anywhere between 1.2 million US to 1.6 million US, depending on the features and accessories that you want with it. You're looking at a delivery time of 7 to 8 months from the manufacturer, because they're not sitting on in the showroom of the manufacturers overseas. They're built to order.
Ah.
Yeah.
So then my question would be, is there a particular recommendation as to how often the machines should be replaced? Is it a case where maybe you use it for 10 years and then you replace it? I mean, I'm not sure, right? So
Well,
how do
typically
you...
these diagnostic imaging machines have a useful life. 15 to 20 years is normal, but during the 15 to 20 years, you would have to replace several parts and so forth. They're important depending on which particular machine. An MRI has a magnet, which is a crucial part, which lasts very long. The other mechanical parts around it over the years will have to be changed every so often. But we don't need to buy an MRI machine every 10 years. Within year 15 to year 20 is when we would look to change that machine, and mainly because of advancement in technology, not necessarily because it's now too old to perform functions, but technology would have changed. And that is one of the main reasons why we would change our machine much quicker, but not because of wear and tear.
That makes sense. That makes sense. So, and to your point, as you're changing out the little parts anyway, by the time you get to that year 15, it's like a half new machine anyway, because you've replaced
Correct.
some of the parts.
That's correct.
Interesting. Okay. So it really then comes down to, I guess, the support and maintenance plan for the machines, and that partnership between your overseas partners, local partners, to ensure that, I guess, problems are remediated
In the shortest possible
as
space of time. Yes. And we have to balance the expenditure on maintenance versus the potential loss in revenue due to downtime. And sometimes the potential loss in revenue due to downtime is much, much greater. So it suits us to go the more expensive route sometimes to get the machine back up as quickly as possible.
Okay, makes sense. So I wanted to talk a little bit about the industry, right? Because your most recent report alluded to, the changing dynamic of the industry. We see the government taking steps to maybe starting to provide its own service, so to speak. We've seen, new players come into the market. Where does Elite fit within the landscape? How do you view your position in the market, your ability to compete and continue to grow market share? Talk to us a little bit about the industry and how you view those things.
Our market is really segmented into the corporate area and the rural areas. Within the corporate area, even though we are still a new kid on the block, 10 years, our largest competitor has been around over 2 decades, and well island-wide. We're still growing in the rural areas. We only have one rural branch, that's at Jack's Hall in St. Anne. We have 2 branches in the corporate area, New Kingston and Old Hope Road. We have earned, over the 10 years that we have been in existence, a very good reputation within the corporate area, and we hope to use that reputation to expand island-wide. As has been previously advertised, we're looking next at expanding into Montego Bay, and we hope to do that within the coming calendar year. We expect that, based on the market surveys that we have done with the need for our services in Montego Bay, we would undergo significant and substantial growth in that region. And within the next 5 years, we might open one additional branch, probably somewhere on the south coast, that segment. Thereafter, we are looking at, in a long-term view of our board, we're looking at the other services within the healthcare industry. Maybe we expand beyond diagnostic imaging and take a look at, because the number of competitors are increasing daily, and the population of Jamaica can only reach a certain figure and no higher. So there will come a time when there are more than enough service providers, and we would have to look to expand the growth of the company in another area. But that's at least 4 to 5 years down the road, in my estimation.
Okay. A lot of things that you just said are very interesting to me to expand on further. So based on that, let's start with the potential for growth that you see. In terms of exploring new services, what would that are you looking, I guess, on tangents to the same industry? Is it a new industry altogether? Can you say a little bit more? I assume you can't say much because I guess you're not, wanting to pull the
We don't want to be too
go down that
premature,
road yet.
but at the same, and certain decisions have not yet been finalized or made. But initially, we want to ensure that the present diagnostic imaging industry is properly serviced island-wide, whether by us or us and additional providers. So we would be looking at, after the expansion into Montego Bay and everything is going smoothly there, we would be examining the remainder of the island to see if there are any feasible investment opportunities in diagnostic imaging in those areas. If there are, we will certainly examine what it costs for us to enter that market and provide that service. If not, then we would look at what is the next best route for expansion of the company. You mentioned earlier that the government is attempting to become more self-sufficient within their public facilities. That will take them some time because they can only allocate so much funds to investment in those areas in any one given year. So it will, but eventually we foresee, all being well for the benefit of the country, the public facilities being properly equipped so that those who attend those facilities can benefit from the required services that they need. You also spoke about new players. Every so often we hear about whether a new entrant into the market or some of our competitors adding additional services. Right now, there are 1 or 2 services that Elite doesn't, at this point in time, offer. We hope to eventually become a total, all-inclusive service provider at each and every location, or if not necessarily at each and every location due to space limitation, within a geographic region. We hope to be, whether not at this branch, maybe at a branch close by, you can get any service you require within the industry at Elite. As you mentioned earlier, it's very costly to offer all the services because due to the cost of the equipment, but that is a long-term goal.
So you mentioned a total all-inclusive service provider. Can you capture what that would mean in terms of maybe the experience for the customers, what they would be able to get from Elite when you get to that?
Basically, what I'm saying is any service that you need, any scan within the realm of the modalities that are offered, we want Elite to offer every single one. Right now, for example, we do not offer mammography, unfortunately. Within the next 2 years, all being well, we should, but we don't want it to be an occasion whereby a customer requires a scan and they contact us and we say, unfortunately, we don't offer that, and we have to refer them elsewhere. We want the issue to be, yes, how soon can we slot them in to an appointment space? We don't want to be turning them away. So it might not necessarily be at the Old Hope Road branch, for example. We might have to accommodate them at the Harvey Road branch, which is a few minutes away, but we don't want to have to be turning them to an external provider. So that is our thinking. And eventually around the island, not necessarily in every city and town, but within close traverse for every potential client out there, we want them to be able to access our services and get anything that they need from us.
Okay, understood. So talk to me a bit about what you see for the industry, right? Because with that move by the government, with just the realities facing the industry, do you see potential consolidation? Is there an opportunity for Elite in that space? And the next part of that question, is that something that you actively pursue, that that being acquisitions or inorganic growth?
Consolidation opportunities for that exist. Even right now, at present, we recently examined an opportunity a few months ago, which we did not take up. Smaller providers will face significant challenges where they would have already faced challenges in finding the required capital to keep their machines going, repairs and maintenance, or changing out machinery. A company like Elite, which is a listed company on the Jamaica Stock Exchange and properly capitalized, we do have challenges raising the capital that we need for everything we want to do, but we are far better off than a smaller provider who is not listed and has to find their own personal funds or those of equity investors in order to properly equip their business. So there will be some who will fall by the wayside due to competitive issues and challenges faced, and I do foresee consolidation. That move has already commenced within the industry, and eventually will grow because, as I said earlier, the population of the country is so large and no larger. We cannot create space, so the client base out there will grow nominally, whereas the number of providers is growing probably at a faster percentage rate, and we can't all have the same customer. And each provider tries to gain customer loyalty. So if you're my customer for the last 3 years, I try to treat you in a way that next year when you need a scan, you're coming back to me. You're not going to the new provider who just set up shop a couple months prior to that, because you know the experience that you received prior coming to Elite. So it's not going to be easy for someone to just come in and gain a great market share without the history and the track record. So there will come a time when the market is saturated with the number of providers that it can accommodate. So it will be a case of survival of the fittest and the finest, and we hope to be at the top of that ladder.
Yeah, understood. So let me ask you this question. I want to shift the conversation to focus on your investors, your shareholders. How do you see Elite being able to continually provide value for them? So we spoke about that balance that you needed to strike earlier. What's your thought process or focus in how you can provide value for your investors?
Well, our investors mainly became investors because they are looking for a return on their investments. So for us to be able to continuously over the next 10, 15, 20 years doing that is to ensure that we properly manage our resources and run and grow the company in accordance with what is needed for long-term survival. At the same time, whereas we want to be around for the long term, investors always have a choice. All right. So they will be balancing the rate of return that they can get in the short run versus having a secure investment that they can put down and go to sleep and be assured that when they awake, it still exists. So we have to ensure that we are a number one choice or number two choice for those who have capital to invest and looking to place it in a listed company that will be not only provide a good rate of return in a quick space of time compared to the other opportunities, and also not end up being a long-term loss. So we are constantly thinking about our shareholders' needs, short-term and long-term needs, while at the same time looking to grow the company and ensure stability and long-term existence. And it's not an easy. There's no formula to say how much we should put in this and how much we should put in that to ensure that we achieve that medium where everybody is happy. It's never easy to please everybody at the same time, but we have to do what is prudent and logical and fiscally responsible to ensure that we will always be able to please you, just not necessarily to the extent that you want to be pleased in this particular dividend payouts. But maybe in the future dividend payouts, you will be more surprised than prior ones.
So in terms of the plans that you have for growth for the future, what does that look like in terms of your potential to either maybe raise funds, whether it be debt or equity? Do you see yourself having to maybe add additional capital to the plans that you have for growth, whether it be balancing the situation with your machinery, whether it be expanding the services that you're offering or increasing your footprint as a company? Do you see yourself
Well,
having to raise more capital in the near future to accomplish those goals?
it depends on the order of priority that we set, which is not yet fully determined. The discussions, preliminary discussions, have been held internally, and we have a medium-term growth plan which involves branch expansion. But at the same time, concurrent with that, we also want to ensure that we provide for all the modalities. Um, it is branch expansion naturally would be more costly, and very likely if we go that route, we would need to probably revisit the markets and raise capital. Um, Expanding the modalities also costly, but not as costly as branch expansion. So that more likely would be a mixture of debt and equity in the medium term. So it depends on which one we give more priority. We can expand a branch and offer one modality only initially, rather than offering 4 or 5. Uh, or we can seek to expand the offerings within the existing branch network to make sure we offer everything. So at each point in time in the economy, and we take a look at what is happening in the industry and who is offering what and what is more feasible and prudent for us to pursue at that point in time. It changes, the dynamics change as new players come in, and our existing players expand in certain service areas. So it is not something that if we decided 2 years ago to go into this route, 2 years later we might have to change a plan based on other factors external to us and our plans.
Okay. So I have just two more questions for you. The first one that I'll ask you is, how do you, so it involves a bit of, I guess, trying to predict where the future trends may be, but what do you see as what would be the key drivers of this industry maybe 10 years from now, right? Thinking maybe as to what you may need to provide also to meet the demands of the future, right? So what does the future look like essentially, and what trends are you seeing for the industry that you're operating in?
Technology is playing a very big role in this industry, not just in the abilities, the machinery, technology, how the whole healthcare industry overall, technology is beginning to play a more important role. Telemedicine is worldwide, internationally, is being introduced, and it is, well, I do believe it has reached Jamaica. I've seen local providers offering such services, and it will play a great role. As far as diagnostic imaging is concerned, you can't stay home and do a scan. So you'll have to still come in, but it has affected how the reports are being read. We recently introduced teleradiology at our Old Hope branch, whereby the radiologist, who is a doctor who reads the report and provides a report, reads a scan, examines the scan, and provides a report, they no longer come on site to do that. The reports are sent to them electronically through the equipment for them to do the assessment. And this has reduced our direct costs significantly. And it is one of the ways that we would be able to provide a greater bottom line and a return to our investors. But that's just one example within our industry where technology is playing a role. Home MRIs and changes in how the equipment functions and the processing time. So technology can change that, whereby we buy a new CT scan today, and 3 years down the road, the features of that CT scan are redundant. So we have to keep abreast of changes in technology in order to remain significant and important in the industry.
Okay, so the key driver is essentially technology, and you want to be on the cutting edge. Otherwise,
That's correct.
you make an investment that may now start to lose its value by the time it's fully implemented. Okay.
That's correct.
So
And another aspect of technology is the ability, the quality of the scans that these machines produce. That has changed significantly over the last 10 years because of the technological advancement in the equipment itself. And naturally, if you come to Elite and our equipment produces a scan, a report of 9.9 out of 10, and you go to ABC Company Limited, who are using a piece of equipment that is 14 years old, that what was 9.9 out of 10 14 years ago is now 3.5 out of 10 today.
yeah.
So those factors have to be considered.
Okay. So my final question to you is are you an investor? And if yes, what do you invest in? Right. So we typically like to ask our CEOs to just get into the mindset of a CEO as an investor, right? So you don't have to say what's in your portfolio, but maybe the industries or the types of investments.
My father taught me that real estate will never go away, will never get destroyed. So I'm not an equity investor. I have not been an equity investor in over a decade. Real estate has been my target investment for the last few decades.
So interesting. I have heard the real estate idea. For me, it is challenging in terms of just cost, right, and maintenance. Because I personally invested in some properties, and the cost for maintenance it's very cash intensive. But definitely over the long term, I see where it does provide value. So I mean, that good option.
Yeah, and the real estate is not going down. If it does go down, it's always a cycle. It will go back up,
Yeah.
both locally and internationally. I've seen it. I've lived long enough to see it happen and repeat itself more than once. So with stocks now, there are so many other variables to come into play that if you don't keep abreast of things that happen both locally and externally that can affect the value of your stock, it can get pretty tricky. But real estate is more a safer,
Steady and stable. Yeah.
safer. It might not appreciate 20% this month in 1 month, like a stock can easily do that. But it's all about your risk level, your risk tolerance.
Yeah, man, understood, definitely. So, Harvey, I don't know if you have any final thoughts or comments that you'd like to share as we wrap up this interview. Anything that you'd want to leave that maybe I forgot to ask or failed to ask that you'd want to
No,
just
I would just, since you gave me the opportunity, I just promote ourselves naturally. And we emphasize customer service. We try, because every provider, or most providers, have equipment that is new and up to scale and equitable across the board. So it's all about our processes and the service that we offer to you, the client, that really makes the difference. And we listen, we take each and every complaint seriously, and we learn from our mistakes, and we try to ensure that you, our elite customers, get the elite service that we profess to offer to you. Now and then we do make a mistake, unfortunately. The nature of the game is customer service, and humans will every so often make a mistake, but we learn, we listen to our clientele, and we put ourselves in your shoes, and we try to see what is it you want, what is it we would want if we were the one sitting in the lobby waiting, or at our customer service counter. How would we want to be spoken to? How do we want to be treated? What kind of ambience do we want when we come to deal with our health, which is something very, very important to each and everybody. And from that point of view, we are continually trying to improve our service so that once you come to Elite, you always want to return to us if you need our services.
Great. Thank you so much, Harvey. It was a pleasure speaking with you. Thank you so much for giving us the opportunity.
Jermaine. Pleasure was also mine. Take care.
Learning is the key to successful investing. And who doesn't want to invest in some way?
Here at L.E.A.R.N Grow Invest, we focus on financial education, all with the aim of sharing our knowledge on personal finance, investing, and building wealth. We do this on the foundation of our faith in God.
If a more holistic approach is what you need, check out our Grow Faith-based financial coaching program.
Find out more about us at learngrowinvestclub.com
and follow us on all social media platforms at L.E.A.R.N Grow Invest.